Thank you. My name is Michael Williams. I'm the founder and CEO of Vendetta Mining. Vendetta was a company that we put together several years ago in 2014, and the idea at the time was we could see a coming closures of several large lead zinc mines worldwide, and we felt that we could fill part of that gap by advancing Vendetta towards production. When we initially started, it's located in Australia, in Queensland, there was 5 million tons of approximately 8% lead zinc, and that had been known since the early 70s when it was discovered. We felt we could, by doing further exploration, take the project to around 15 million tons with the goal of mining on our best 10 million. Where we currently sit, we've taken it to 14.7 million tons, and according to our PEA, which came out in 2019, we would be mining around 3,000 tons per annum on a total of 10 million tons. So we've hit our initial goals. Where we were wrong is we mistimed the market. We didn't expect the lead zinc market to fall out of bed once it did in 2018, 2019, and that was largely due to the slowdowns in China caused by the United States and China tariff wars. But it looks like we're heading back into a zinc market, lead zinc market for that matter. And our project is positioned with a little further work. We'll go to PFS, pre-feasibility study, and then probably from there make a construction decision. So we hope to capitalize on this particular zinc cycle that we think we're in right now. Zinc is used for galvanizing, for metal. It's primarily used in construction and in the automotive industry. And lead, a lot of people don't realize, is still used a lot in batteries, and it will be for the next 30 years. There's just not a lot of lead deposits out there. So sometimes you get paid more for your lead than you do for your zinc because the processing charges are higher. But even the EV batteries use lead. They need it to give it that cranking power. And we don't see that changing for the foreseeable future. So in this particular project, we have 100% ownership. It's in Queensland, which is deemed sort of one of the world's premier mining districts. There's a lot of mines in production. Permitting is fairly straightforward. We don't have the auspices of any nationalization. So things are relatively straight ahead from that point of view. As I mentioned, we've increased the resource by 3 times. We still have multiple exploration targets. I don't believe it'll be a 10-year mine life. I'd like to think it'd be closer to 15 or 20 when all the exploration is done in the area. And in our current resource, one of our big zones is not included in that mine plan. We'd need to do a little bit more drilling, and then we could move it in. So there's quite a bit of significant upside. What's really happened here, though, when this project was discovered, it was largely the only deposit in the area. Since then, other what are now mines have been found, which gives us mature infrastructure. We're close to power, rail, water if we need it. We can be on the coast in less than a day to access the various smelters in Australia or send our concentrates to Asia if we choose to. And that's one of the key things you focus on in a base metal company is infrastructure to make things work. So as I mentioned, it's a great address. These are some of the big mines that have grown up around us. Lady Loretta, Cannington, which is only 22 kilometers away. One time the world's richest silver mine. It's probably got another 10, 15 years mine life. Century, which is close by. So we have a lot of infrastructure from that, which is going to be key. That's our mineral resource as of 2018. Later this year, we'd like to update it when we update the PEA. But we're looking right now a total of 5.7 million tons of indicated and inferred 8.2. It's key to note that 84% of that mineralization would form an open pit, and for open pit mining is always more cost effective, and that's the goal from the get-go. These particular holes are some of our highest grade holes. We hit them in the last program, and that is not included in the resource calculation, but it will be. And I mentioned that we were going to redo our preliminary economic assessment. We hope to have that done this year. There's several key factors within that PEA that I think will help optimize this ore body and could increase the value anywhere from 25 to 50%. One is the Australian government has put in tax cuts, but the key is the ore sorting work. And ore sorting it's not new technology, but it's not that old either. I think it's in the last 6 or 7 years. It allows companies or mines, deposits to separate waste rock from ore that you will run in your mill. And in a lot of cases, it reduces your capital costs and your operating costs. It's one of the, I'd say in the last 20 years, one of the key technologies that we have, one of the key tools to increase the profitability of our mines. And we've done our test work on it, and it works excellent here. We just need to do bigger sampling of it, which we hope to have done this year. We need to test 3 zones at 600 kilograms per zone, and then we take those results and then we restate the PEA. That's sort of what it looks like. It's just simply optically you separate the dark minerals from the light waste rock, and in the case of Pegmont, it significantly impacts the bottom line, but we need to put it in a preliminary economic assessment and do those tests later this year. That's what our project would look like in 3D. There's lots of areas to enhance it. As you can see, the majority is open pit, and about 14% will be underground, but that's ore that will be mined in years 9, 10, and 11, so it doesn't impact the economics initially. Corporate structure, we have 300 million shares outstanding. Our largest shareholder is a Chinese group out of Singapore called JNY Investments. They've intimated that they would like a larger presence in Australia, and at some point we'll be talking with them to see if they want to carry the project forward. And just in closing, all our management, myself including, have been involved in various mergers and acquisitions and takeovers. We're experienced in selling projects to other groups. And I think at the end of the day, companies like ours that have these development projects that don't have a long runway to go into production, we're the development wings of the majors, and they come to us looking for product. And zinc, like copper, it's not in scarcity, but it's heading in that direction. It's really difficult to put one of these type of projects into production. What used to take us 10 years from finding it to production is now 15 years, and that number has gone up. And in the last 10 years, there hasn't been a lot of lead zinc discoveries or base metal for that part. So I think at some point we will head into that strong base metal market, and we hope to capitalize on it. The other option we're looking at is listing on the ASX. It's very unusual to have a Canadian company focused in Australia. At the time, the valuations in Canada were higher. That's since inverted somewhat. So once we do the PEA, we'll look at listing in Australia, where we see 2 to 5 times higher valuations. And at that point, we'll make a production decision and then go to PFS, or feasibility, sorry. Thank you very much. Have a good afternoon.